All right. Good afternoon, Checkmate Trading Crew. Today is Tuesday, August 2nd, 2022. It is just afternoon here in New York City. I hope everybody's doing well. Hope everybody had a wonderful weekend. Let's get down to business. There's a lot of things going on today. So crypto, or no, I'm sorry, FinTwit, and a lot of you on Discord are talking about as well as the media. They're talking about the whole media or the whole Taiwan incident with Pelosi's visit. Now, I don't really consider that an incident per se. I think it's more, headline sensation. If you actually look at our indicators for that area, which is, China and Taiwan. China, Taiwan and China are very interlinked, even though they have this dispute over sovereignty. China considers Taiwan to be just a rogue region of China, one China. But Taiwan sees themselves as its own sovereignty. All right, and so you're seeing that kind of struggle. Now you have the second in line. If something happens to the president, you have somebody who's second in line, who's Nancy Pelosi, Speaker of the House, who's visiting. This is the highest ranking U.S. officer that has visited Taiwan, and so it's natural that China is going to ratchet up their rhetoric. Yeah, that's to be expected. And after Pelosi, I think Pelosi just landed, like, I don't know, just like a couple minutes ago, or maybe an hour ago or something like that, and it's turning out to be really not that much. Just turning out to be just a big nothing. We're just seeing a muted response. We were low on we were a little bit lower on EWT and FXI, which are Taiwan and China ETFs. And, they've recouped a lot of their major losses. And I think there was just a lot of hedging going on for this event, just in case if it did escalate. And again, guys, what have I been telling you guys for the last couple of weeks? We've seen lots of buying in Chinese growth stocks in the past few weeks as the market has bottomed. Temporarily at least, the market had bottomed, remember, a couple of weeks ago. So around here, I told you guys that institutions were buying. Okay, they're buying growth stocks, and so it's very possible that those people who bought all these shares right here had to hedge, okay, just in case if it escalated. And now those hedges are coming off, and then we'll see. Now let's look at the big picture, okay? And I don't think the Australian dollar would make a move like this if it was just about a visit and a landing, okay? Remember, guys, yesterday I told you about the 3-day rule. If you go to our Forex channel on our Discord, you will see that I posted many different currency charts and this concept of this 3-day rule. All right, it's just something that I've noticed for this year, especially since January, is that whenever we break a certain pivot, the actual currency has to stay above or below that pivot for 3 days in order for that to be a quote unquote real move. Okay, and we've just seen this where for like a day or two it'll pop above like a pivot or pop below a pivot, and then it will just quickly reverse and then continue its main trend. And so that's what I'm seeing in Australian dollar. It popped up over our 2 green pivots. That was day 1. And we needed day 2 and day 3, but we're not getting that. So day 2, it looks like we're going to close here. And if it keeps going down or if it keeps staying over here, this is all going to be invalidated. And with China, I think the biggest concerns in China is they're having huge slowdowns in their market. It looks like they're going to have a secular slowdown in the market, in their economy. And so what a shame, right? What a shame, because I did have FXI puts. I got out at a very, very, very small profit, almost pretty much break even. A week or two, or a couple weeks ago, I got punked out. I believe. When was that? Oh, right here when it went above our 6903 level. I just managed risk. I didn't want to face a drawdown, but man, I should have held that because if I had held that position, it would have doubled because of this move. This move, it made it double. So, oh well, womp womp. It's about 30% chance that after I stop out, that the move continues, and it's, in hindsight, it's better off keeping the position. That scenario happens about 30% of the time, but 70% of the time, that stop will save me from further losses. So, you have to, in the end, you got to manage risk in the end. So, yeah, didn't really profit on that trade as much as I had wanted to. Again, very small profit, almost break even. Could have doubled it, but that's life. That's trading. It is what it is. I'm still in EWT. We still have some profit in this. I do think that, and they're for December, so I still have time. I think, the slowdown in China will materialize. And even though they are, and I was trying to make this point earlier, even though they do have this conflict over sovereignty, Taiwan's main export partner is China. Okay, so they do have some very strong economic ties to one another. So, even if it does escalate, do I see it escalating to the point of a hot conflict? I think that that chance of that is a little bit low for now. Of course, it may change. And there's some members that probably remember from back in the old Discord. I have been saying this for a while, that the main conflict is probably going to happen, like China or Taiwan. That conflict is going to happen. Now, I think it's going to be more of a cold conflict where there's going to be more of an arms race and a lot of rhetoric back and forth, possibly a blockade, just like the Cuban Missile Crisis in the United States many decades ago. Maybe that's a scenario that plays out with China putting a blockade on Taiwan. I can see that happening. Now, that would be a huge escalation on China's part. Not sure if they want to go through that, especially when they're going through a secular downtrend as well. They have some demographic issues that I think that are going to play out and slow down their economy. So do they really want to slow down one of their main export partners? Not sure. Okay, so time will tell. Trying to bet on that with real money is, I think, a fool's game. But we'll see. We'll take it one day at a time. However, for those of you who like to play this, who like to play these kinds of movements, one play that I'm just thinking about just out loud, I probably won't take it, but, maybe Lockheed Martin. Okay, so I think if definitely there's a very good chance of a cold conflict, like a Cold War, where there's weapons buildup and lots of rhetoric back and forth of potential action. And so, it may be that the United States exports more weapons to Taiwan, I think, in the next coming years. So I'm actually thinking about, a play here in Lockheed Martin. I think if one were to be aggressive with Lockheed Martin, you can start scaling in around here, which is the low here, which is 394.66. 394.66 may be a good opportunity for someone to leg in long on Lockheed Martin. The patient trader can wait for further value down at 373.67. Okay, 373.67 for the patient trader. For the more aggressive trader, you can look towards 394.66. Okay, so I don't know if I'm going to take that play or not. I might. I think I'm leaning towards more that 374 though. The real low a couple weeks ago here, 373.67. So that's where I might get very interested in maybe some leaps. I might get some leaps, or maybe I might even pick up a few shares and aggressively sell some covered calls on this. I do think that military conflicts will increase whenever we have peak credit. It seems to be that way, that military conflicts increase as well too. Back in the 70s, we had the Yom Kippur Wars and all that instability in the Middle East. That was also peak credit. 1910s was the same thing. We had World War II then. So it seems to be a common theme here that whenever we have peak credit, also we have increased military conflicts around the world. It's actually funny. There's even more of a coincidence. We usually also get through a pandemic during that time too, during a peak credit. 1970s it was Hong Kong flu. 1910s it was the Spanish flu, and now obviously it's COVID. So. We'll see. We'll see what happens. Humans are funny creatures, all right? So we'll see. We'll see what happens. But that is a potential play just from what you're seeing on the headlines. I just wanted to give you shed some light on what's going on. I really don't think the most of the price action. I don't really think it was from Pelosi's landing. Although maybe just today's. But overall, in the long scheme of things, I don't really think that's what's causing China and Taiwan to face weakness in recent weeks. I think it is their economic data. Their economic data came out really bad, and China also starting to see some more flare-ups of COVID. So they're shutting down more places. It's all over. They're going through that horrendous zero COVID policy, and so that's definitely slowing things down. And again, our leading indicator for China is the Australian dollar. Okay, and the Australian dollar went over its pivot, and the very next day broke down. Just like here, where we had news that Shanghai was getting out of all those lockdowns, but then Australian dollar called BS on it, and I think so too. I think this is maybe this is some sort of like calling of BS right here, like, oh, there's no escalation. Well, BS, maybe, who knows? But it's not really the stories that we tell ourselves in our heads that matters. Okay. The stories or whatever, you got to look at the data. You got to look at price action. You got to look at the data. You got to look at indicators. And the data that really matters. Okay, our stories and opinions, they don't matter. Okay, as the great Jesse Livermore said, the market is never wrong, but opinions often are. Okay, and Jesse Livermore, I get it. The caveat: do what he says, don't do what he does. Yeah, he had actually great advice on risk management. Unfortunately, he didn't take his own advice. So in the end, he took his own life because of the losses that he incurred in the market. But that's a morbid story for a different day. Okay, so that's the Australian dollar. Speaking of Australian dollar, how are metal markets reacting to all of this? Weakness in the Australian dollar is giving us a weakness in metals. Although, oh, hey, look at that. It looks like metals are recovering. But the weak Australian dollar does keep a lid on metals. And why is that? Well, it's because a lot of metals demand comes from China. And when China is doing very well, the Australian dollar increases because they have to buy more Australian dollars to buy those minerals. All right. And so that's why Australian dollar is such a good indicator for China as well as for the metals market. So we're seeing metals trying to make a comeback, so that's interesting. Let's look at gold. Gold is still part of our plan, by the way, guys. I still haven't gotten rid of our gold plan. I still will enter gold if it gets to our 1680s level. So that is definitely something that I'm looking for right here. Okay, right there. Okay, 1680 or so. So I still have that plan. We'll see. I think this is just a little bit of bounce. We come back test it, and then maybe the gold goes up, and at the same time, maybe the dollar will come down. Okay, we'll see. Copper. Okay, copper showing try to recover some of its losses after Pelosi landed, but it's still in the red. Let's see if it changed materially. No, it hasn't. It really hasn't changed all that much. This was when Pelosi entered Taiwan and landed. Okay, so huge moves. Now it's kind of just muted. We'll see what happens. Okay. Speaking of gold and copper, one of the things I really wanted to go over today was the bond market. Okay, guys, I think the bond market is showing us some pretty interesting signals, actually. So let's go through our data. I think our data that we look at, the indicators, some of the indicators that we look at are very telling, and it kind of paints a story of what's going on in the bond market. So the bond market, obviously a lot of traders take their cues from the bond market. Everybody thinks that the bond market reacts to the Fed, but it's the other way around. The Fed reacts to the bond market. In the end, the boss is Mr. Bond Market, okay? There's a famous U.S. politician and political strategist named James Carville, and he said it the best. This is one of his quotes, but he said that if reincarnation were a thing, he wouldn't come back as the president or the pope. He'd rather come back as the bond market, because you can intimidate everybody as the bond market, which I think has a lot of truth to it. The bond market, pretty much sets the tone for the rest of the market. It's like the big bro, okay? Bond markets and currency markets are like the big brother, all right? Equity markets and everything else, risk assets, follow what the big bro is doing. Always. It's the little bro that follows the big bro, all right? And so I think that is, I think it's very important that we look at that. So let me just pull everything up here. First off, ZF, right? The 5-year. I told you guys. Did I tell you guys, or did I tell you guys? If I said if this breaks down, okay, we're gonna see risk off. Okay, we're gonna see some. We're gonna see some risk off if this breaks down, because it's going to further invert short-term and long-term yields. All right, that yield curve. All right, I said that if this breaks out, there will be less of an incentive to hold the dollar, and cash will be trash. All right, and then we might see some risk-on sentiment returning. All right, so we're seeing a breakdown here of ZF. So we'll see what happens. And actually, and even though ZF is down 0.5%, ZB, which is the longer-term bond, is down even more. So. Right now there is a little bit of volatility in the bond market, as you can see in the MOVE index as well, which is the VIX of the bond market. It is up, so it stopped here and it is starting to inch its way back up. As long as there's a lot of volatility priced in bond markets, it's hard for institutions to really buy heavily into risk assets. Okay. It's really difficult for them to do that, especially when there's all this yield volatility. The 30-year, 10-year, remember guys, remember how I said this was the yield? If you're going to look at a treasury yield spread, this is the treasury spread you want to be focusing on, is the 30 and 10. Yeah, the media likes the 10 and 2, and bank stocks also follow the 10 and 2 very closely, but really the pros, when they look at that big macro picture, they're looking at the 30-10. The 30-10 is rarely talked about in the media. It's actually a very common theme in financial media. The really useful stuff is rarely talked about, and usually it's the very noisy stuff that media likes to focus on. And I think that's by design. It's because the noisy stuff sends a lot of signals, and there's more signals, less quality, but more sensation as well. So obviously they're going to focus on more those indicators that give out all those triggers and signals. But what you really want to be looking at is things that give you quality signals. They may not give you a lot of signals, but when they do, it's quality. That's the 30 and 10. Okay, look at that. The 30 and 10. This going down, stagflation fears, recession fears. Okay, this going down. We really, really wanted to see, if we wanted to look past this recession, we need to see this start breaking out. Okay, remember what I said? I wanted to see it go above past 0.4, and it never did. It approached it, and then it just got shot back down. Okay, so, recession worries. All right, maybe. Okay, so, and this too, TIPTLT, this is the inflation protected treasuries versus long-term treasuries. It is down. The more down it goes, deflationary / stagflation / recession fears. When this goes up, inflation fears. Okay. And I told you guys this too. Watch out. If this thing starts hugging that lower Bollinger Band and riding that lower Bollinger Band all the way down, that is the market's way of telling the Fed, hey, hurry up and start cutting rates. Okay, that's the bond market telling them that. Okay, I wanted to, over the weekend I shared with you guys a potential trade that I wanted to get long on TLT. Okay, now TLT long, it is not really cooperating with me right now. I thought we were going to get a pullback. Remember, over the weekend, I said I want to see one more confirmation before I make a move. Well, that's, my confirmation was that. And my confirmation really was, are we going to see this level off a bit? And I did. I got that confirmation yesterday. And 10 and 2 further inverted. The 30 and 10 went negative. And so I was like, oh, okay, so on the next pullback on TLT, let's go long. And of course, what does TLT do? Well, it doesn't, right? It just pops up 2% for the day and ruins it. Now, we're actually getting back to those levels. I would like to go long on TLT if TLT can come down to like 115, 116 zone. That would be a quality entrance into a TLT long. Now, this is a counter trend play. The overall trend is still down. I do think, though, we see a little bit of a relief rally. I will short TLT if it starts getting higher into like the high 130s, low 140 zones. It really depends, what happens around this time with treasuries and junk bonds, but. And where we are in the rate tightening cycle. But yes, I do plan on shorting TLT when it comes to here. But right now, I do see a very compelling long on TLT. Okay, this is a trade I'm willing to lean into. Okay, if we can get that quality 115, 116 entrance. If we get that 115, 116 entrance, I'm gonna lean hard into it. What do I mean by leaning hard? 5 to 10% of my speculative account. Okay, that's considered a big trade. I mean, considering right now I have 3 or 4 different spreads, and I'm still like 95, 96% cash, 95, 94% cash, something like that. Considering that 5 to 10% of spec, that's a pretty big allocation in my standards. Of course, everybody else, everybody has their own risk management and their own position sizing, but that's just me. 5 to 10% is a big, it's a big allocation for me, okay, for my risk management. So anyway, what am I looking at that gives me such conviction on this? Copper to gold ratio. Now, we here at Checkmate Trading have used the gold to copper ratio. So copper being on the denominator, we've looked at this chart before. It's our currency, our commodities risk on, risk off signal. Okay. So if you invert that, so instead of gold divided by copper, if you now take copper divided by gold and you multiply it by 1,000, it seems to be a good indicator of where the 10-year treasury yield will go. Okay, so let me hide that. Yes. Okay, and this is TNX. So TNX is the 10-year treasury yield. Okay, actually, you know what? Let me, I don't need to use TNX. Well, you all can use TNX if you want. Okay, but I think TradingView, yes, gives me the actual bond yield itself. So there we go. So yeah, okay. So if you actually just look at the 10-year treasury yield, it actually follows very close to that copper to gold ratio. And it's been doing that actually for a while. This kind of relationship actually started back in 2006. All right, since 2006, that copper and gold ratio times 1,000 has tracked the 10-year treasury. This is something that's professionals use a lot too. It's not uncommon for professionals to know this. The reason why I haven't shared it with you guys is just because in recent years there's been some divergences. Okay, there's been some divergences. It's been getting very noisy as an indicator, but now from what it looks like it shows the direction of the 10-year yield very well, but it just overshoots it. It's just like the more volatile version, okay, of this ratio. So the 10-year is just more volatile than the copper gold ratio. It's just the copper gold ratio just tends to be a little bit more muted, a more muted chart of the 10-year treasury. Okay, at first I thought maybe maybe that relationship doesn't hold, but after seeing this now, it looks like the relationship is holding. It's just that the 10-year just does a little bit more. It overshoots it and undershoots it, based on, if you're using this as an indicator, that is. All right. So I do think that the commodity markets are telling us that the 10-year treasury yield should be closer to 2%. Okay. So I'm guessing if it follows the same pattern that it has in the last 2 years, that will probably undershoot it. So right now, that copper to gold ratio is at 1.96 right now. I think it may shoot down a little bit more than that, okay, or at least down to that point, okay, which begs the question, where are the bond vigilantes at? It seems like they're nowhere to be found. Bond vigilantes are people who sell bonds in protest to the U.S. government. And their fiscal policy and monetary response. We're not seeing that. We're actually seeing a treasury shortage. Okay, we're seeing a treasury shortage, and I actually posted that Bloomberg news headline where the treasury plans on issuing $440 billion of debt rather than the 140 planned. And so, again, I think what they're trying to do is mitigate some of that shortage in the bond market, because as yields come down, that loosens monetary conditions. And so that would reverse all the hard work that the Fed has done for the past 6 months. And I don't think that's what they want. Or if they do want it to unwind, they want it to at least unwind a little bit slower. Okay, they don't want it to do too fast and really increase liquidity too fast and then risk inflation coming back. All right. And so and especially property prices too. So if cash becomes trash again, all right, if cash becomes trash again, I mean, real estate prices are going to go up. It's going to drive inflation back up again. So I'm sure that's not what they want. So we'll see. Again, I want a pullback in this. Now, the teal line that kind of ocean blue line right here, that is the inverse TLT, 0 minus TLT. Okay, so when that blue line coming down, that means TLT is going up. But I do want to see a little bit of a pullback first. Again, that 115, 116 zone. Okay, and then I'm gonna buy some 6-month call spreads. And right now there's a good skew on those 6-month call spreads, very good skew. So you can actually take advantage of that. A lot of people are betting on treasuries going up, and you can actually see that in the options chain where the IVs for higher out the money calls are more expensive IV wise. And so that, for our call spread strategy, that's going to work really well. That's going to put the math in our favor. And again, I'll go over that more when the time comes. But yes, I'm adding that to our plan going forward. I'm going to be adding this TLT trade to the plan. This is a great indicator. I think, I think it's proven itself. Again, at first I thought, maybe it's lost its link, but no, I think the link is still there. It's just the magnitude of the moves are just a little bit different. But timing-wise, and where it will go in the short term, I think it definitely is an indicator for the 10-year treasuries. Okay, so I'm going to be using this more and more. Okay, so we'll go over this on High Noon Highlights going forward more often. All right, so that is that. So that's why I'm going to be playing TLT. So adding that to our plan. Speaking of the plan, Tesla. I talked about Tesla before, guys. I'm going to start monitoring that on a daily basis. Remember, some of you, so for those of you who know me from the other Discord, from the previous Discord, you guys know I shorted Tesla right here. I used ARK puts to short Tesla right here. Remember that? This is that same red line. Same red line. I haven't changed it. Haven't changed it one bit. I drew this back in January. Okay? I drew this line back in January. All right? Still in play. Right when we were around here in the, about a couple of weeks ago, I said, I'm willing to short when he hits that red line. People laughed at me. I know. Some of you on here, some of you on this damn call right now, okay? Some of you made fun of me for that, saying, "Oh, it'll never get there, never, right?" Well, it's awfully close, isn't it? From then till now, it's made about a 200-point move. We're less than 200 points away from that red line. So in a matter of a week or two, 200 points, fine. It can go another 200 points. And if this decides to keep rallying, that's where I'm going to start shorting right here. Okay. I'm going to, so if it hits that, I'm shorting. All right. That's part of the plan. And we're going to look at this, I guess, as you guys know, at the end of the video, for the last 10-15 minutes, I always go through our plan and our indicators. I'm going to be adding this to our daily plan now because I think it's getting close. I think if we see some, that bear market rally continuing, which it looks like it is, we definitely see this within the next couple of weeks. All right. That would be a very compelling short from me. All right. Right here. Very compelling. 3 to 6 month out put spreads. Ride that thing down, all right? Write it down. That's what I should have done here. Instead, I did like weeklies on ARK. Yeah, it made some good money, but if I had done like 3 month put spreads and really held it, I would have made way more. But hindsight is 2020, right? So I'm gonna be doing that. 3 to 6 month put spreads right here. Starting the long strike starting at Delta 40. And again, I'll go over that trade setup the closer we get to this. All right, we're still far away. We're still about 200 points away. So we'll see. Okay. For those of you who are very aggressive traders, you may venture into shorting Tesla at 951. I don't like that. To be honest with you, I don't like that. Because Tesla is one of those things that could just really go pop above those weaker levels. I'm going to be patient and I'm going to wait for this. I'm not going to be aggressive on this and short from here. Yeah, could I miss the trade? Very possible. I might miss it. I might miss the short entry, but I'm willing to miss out for a potential for a higher quality short right here. All right. So that's my plan for Tesla. All right. I see somebody's typing. What happened? Can I look at TXT? Another defense. TXT? What is TXT? Somebody's asking about TXT. Textron. I've never heard of this company, actually, to be honest. Do you know what kind of stuff they create? MSC? Do you know? Do they build missiles or? Okay. Oof. Right now, it's right at its previous support. So this used to be support. Support got broken in June. June 9th, of course. June 9th. I keep repeating this idea of June 9th in the ECB meeting. That was a bombshell report, guys. Okay, I still hear professionals talking about June 9th and how this quarter is going to be like one of their worst quarters in recent years because of that June 9th meeting. A lot of pros are telling me that. And I'm not surprised that a lot of stocks lost their support on June 9th. But anyway, it lost its support here, and now it's testing that support. Will it use it as resistance? I mean, that's technical analysis 101. If you believe in such things, if you believe in such things, I think just from a TA perspective, and again, you know how I feel about TA, but just from a TA perspective, it looks like This is a compelling short. Yeah. Just TA only. I don't know texture on the company. I don't know like the fundamentals. They do very well income. That's awesome. Okay, so yeah, I'll have to look at the finances, and I'll do a little bit of homework tonight, and maybe I report back tomorrow on what I find for the finances. But marine and land systems. Okay. Helicopters, UAV, unmanned aerial vehicles. Okay, so interesting, interesting. Okay, interesting. Okay, so it sounds like a lot of aerial stuff. Okay, interesting. Because Taiwan is an island, if I see, I'm gonna have to look also back in their earnings calls and see if they're doing anything, or if they're trying to compete for any of that Taiwan business. Um, and if they're a contender for that, I mean, this could be a long term buy, maybe perhaps down here around 58. Again, I'll have to confirm the fundamentals. I haven't really, this is the first time of me hearing about this company. So maybe if the fundamentals are right, I can look to like 58 zone as a long entry. But right now, just from just a TA perspective, this looks like a compelling short. So I don't know. Maybe we do a pair trade here. Maybe the thing to do, because I know Lockheed Martin will definitely benefit from an arms buildup in Taiwan. Definitely, with all the missiles that they make. Oh yeah, their missile systems and everything is going to be a huge demand over there. I think, I think if this pulls back to our levels, we could go long here. But I mean, it kind of, from the chart, it actually looks like they're tracking each other pretty closely. Yeah, it kind of does. So if so, Lockheed Martin goes down, I'm sure Textron will go down too. But if this somehow remains like stubbornly high or chops around at this level while Lockheed Martin falls, that might not be a bad idea to go long on Lockheed Martin and then short TXT as a hedge. So what you can do is you can sell a covered call on Lockheed Martin, use that covered call to buy TXT puts. 35. Hold on. Well, the implied volatility on TXT is actually higher. So okay, well, I'm gonna have to explore that a little bit more. I'll do a little bit more homework and see what I find on TXT. But yeah, a lot of defense companies just pumped pre this. So yeah, basically Pelosi, where the whole media frenzy around Pelosi happened in the last like week or two, right? And so that's where we saw the pump for Lockheed Martin. General Dynamics, yeah, oh yeah, General Dynamics may also be a benefactor. So is Raytheon. I haven't looked at Raytheon stock in so long. I forgot what the ticker symbol is. RTX, yeah. I wonder if is Boeing showing the same thing? I have some Boeing shares. I bought, yeah. Ooh, Boeing, not as good. Um, I have a lawsuit. Okay. Well, it still had a little bit of run up, but the I guess the Pelosi put. We'll call it the Pelosi put. Okay. The Pelosi put. So they're obviously I think it still benefited from that a little bit. I have a few Boeing shares. Oh, so they have some safety news on Boeing. Okay, so Right. So that, yeah, it's a different model. So now more models have problems. Okay, so that's not good news for Boeing. Um, I personally have some Boeing shares myself. Um, I bought during the sell off, the pandemic sell off. I bought at around 100 and 110 here. So I've been holding and selling covered calls. So my cost basis is now in the two digits range because of all the covered calls that I've been selling and the dividends too. No, there's no more dividends anymore. They haven't had dividends. So yeah, so I mean, I'm still holding on to this. This is I have some exposure to defense, but we'll see. I might increase that if the rhetoric ratchets up and we actually see more sales growth out of LMT because of that. I think LMT will be the biggest benefactor though, if there is an arms buildup in that region. Okay, what's going on? I'm just getting alerts on my system right now for ES and everything. Oh wow, what a rally! Look at that. Markets didn't care. Let's see what's happening to. Is it because rates are coming down so much? No, rates are up today. Okay. Oh, wow, look at that. Huh. When did I draw this line? I think I drew this back here. Back in 2019, I drew this. 2018. Huh. Wow. Funny. Okay. I don't know if it just bounces up or does it continue lower. I mean, again, our indicator, that copper gold indicator is telling us that it could go down, and I think so. I think TLT is going to go down. I mean, it's pretty compelling, is it not? Is this not compelling right here? Oops. That's pretty compelling. The 10-year treasury tends to follow this, okay? And I think the reason why it does that is because, as yields come down, all right, when yields are coming down, there's a greater demand for gold, all right? When yields come down, liquidity generally increases. You have a possibility of higher velocity of money and maybe an uptick in inflation, okay? And so we start seeing a little bit of demand in gold as yields come down. When yields go up, that demand for gold goes away. Why is that? Well, because gold is not a cash producing asset, right? You put, 1 bar of gold in your vault, 10 years later, you still have 1 bar of gold, all right? Whereas if you own a bond, at least, a 10-year bond, you at least get some yield out of that, right? And so as yields increase, generally we see the demand for gold going down. So the fact that this ratio is coming down means that gold demand is increasing over copper, right? Because gold is on your denominator. So if this number is going down, that means gold is outperforming copper. So that, I think, in my opinion, I think what that means is that the commodity traders are front running their expectation that yields are going to come down, okay? And they tend to be right, okay? They just tend to be right. And I think, this is pretty compelling. Look at that. It tracks it very well. It's just a little bit more volatile now than what the ratio indicates, all right? So I do think that it's going to come back down and match it. Just like here, it took a while, but it did come back up to match it. I think it still happens. But again, bond markets, rarely go in a straight line, okay? I can see a little bit of chop happening first based on, CPI numbers. Again, next week we got CPI numbers. So again, watch out. All bonds move very quickly during the CPI report. So maybe, what if we get some shocking news out of the CPI and we see a little bit of bond selling because of that, and then maybe we get our TLT 115. If that's the case, I'm going in. I'm going in with some call spreads. Okay, so that's the most compelling trade that I see right now. Right now, this is the most compelling trade I see. So this and our buy the dip level on SPY at 340. Those are the most compelling trades I see right now. And I would say the third most distant third most compelling trade is probably our what is it, the gold 1680 long, and probably right after that is the Tesla short at that red line. Okay, so also high conviction. If you notice, all of our high conviction trades are ones where we have to be patient, and generally those are the trades that make the most money, where you're at the edge of your price structure. Those offer the best reward to risk ratios. All right, the best reward to risk is always the patient trades like that. And you could just do well on two or three of those, and that will make your year. Okay, those are the trades I really love. Those are the trades you can lean into using data. So that's what I see so far. Okay. Yesterday I had some issues with my computer. I apologize. I was a little bit non-responsive yesterday and today. I saw that some of you actually DM'd me. I'll try to get back to your DMs and stuff. But yesterday I was playing around with some code and some different drivers, and Windows wouldn't start. I think I must have broken something, so I had to restart and reload everything. And so I just finished most of that this morning, actually. So hopefully I should be a little bit more responsive. But I just posted yesterday's advanced decline line on bonds. Yesterday we did have an increase. Okay, another advance of a decline. We're still looking for that pullback. When we see that pullback, if the advanced decline line makes a higher low, again, that's going to be one of our signals for the MOAB, mother of all buy the dips in the indices. The New York high-low line is starting to flatten out. We really want to see that curl up. We haven't seen it curl up all year. It's only flattened, but it hasn't curled up over all its moving averages yet this whole year. So that's how I know. That's how I knew that the June rally was going to be a bear market rally. I called the bear market rally here. I also said this was going to be a bear market rally here. Okay, here. How did I know? It's from this. Okay, this really needs, in all bear markets where it really does bottom and we see an actual sustainable bull market, even though it's temporary and only lasts a year or so, this line needs to curl up. It really does need to curl up. Okay, for it to be a sustainable rally. Without market breadth, it's really hard for just a few stocks to just keep giving us new highs in the market. It's really tough for that to happen. Okay, it hasn't happened, so that's why. Usually when there's a sustainable rally, a lot of stocks participate, especially in a bottom. All right. So that's that. Ethereum. Let's go to Bitcoin. Options activity on crypto is super duper exciting, actually. Let's actually update, because every time I update this, everything changes. Okay, literally, it's just like it changes so quickly. I mean, people are really putting money into this. Wow, did you see that? Okay, remember how it said $5.9 billion? Literally, I had updated it like minutes before the HNH call, before the high noon highlights. Literally minutes before. So $300 million of notional value just went in. What did they buy or sell? My goodness. This is so we're still looking at March. Okay, so this is the unusual options activity that I wanted to talk about with ETH, and so it looks like we're seeing more of the same. March of 2023. Okay, so we're seeing actually lots of calls being bought and sold for that expiration. All right, so let me tell you about some of the trade structures that I'm seeing. I'm seeing mildly bullish bets. Actually, it's actually very fitting that we're talking about this, because yesterday one of our members, BZ, I don't know if you're going to be listening to this call later on, but BZ told me that he was in a ratio trade where he went long a closer to in the money strike call option for September 30th, and then he shorted two further out the money calls which is a mildly bullish bet. I think he did the 25.28, so he went long the 25,000 strike on Bitcoin, shorted 28,000 calls for every 25,000 that he went long. So that's called a ratio trade, okay? And so what I'm noticing is that there's actually some ratio trades on Ethereum right now, large ones, okay? I'm talking large Ethereum block trades ratio. So if you actually match up the times, like right here, 47, for example, this one was a 4,500 call sell for 20,000. At the same time, exactly at the same time, there was a buy 10,000 for 3,500. So this is a 3,500, 4,500 call ratio spread. Okay, this spread profits the most if by March 31st, Ethereum is as close to 4,500 as possible. Okay, if it gets to 4,500 by March at expiration, that's full profit. Okay, so it's a mildly bullish bet. Actually, did they make more premium? Did they sell this at a credit? They did. They did sell this as a credit. So even if it goes down, below 3,500, if it just expires worthless, they made money. So they really captured that IV. This is how you play a ratio spread, brother. This is how you're supposed to play it. You want to get a credit on that ratio spread. Why? Because if you're wrong on your mildly bullishness, at least you get to keep a little bit of money. So this guy, even if ETH goes down all the way, in March 2023, let's say it's under 30, let's say ETH is under 3,500, he gets to keep $400,000. This trader will keep $400,000 because that's his credit on this. All right. However, if it starts going above 3,500, that's where he'll start getting, or the trader will start getting more profit up till 4,500. Now, once it gets past 4,500, he may start seeing some losses. Okay, so this is a huge spread that was put on. We're actually seeing other ones too, with 338, 1630 right here. Another ratio spread, exactly the same strikes, exactly the same ratio. So maybe maybe this trader legged in, about 45 seconds apart. So they did one set of spreads and they did another. Again, collecting about $350,000 to $400,000 in credit on this ratio spread. Okay, so somebody's betting big on mildly bullish big bets on ETH right now on the March 2023. Definitely institution with this kind of size. With this kind of size, with this kind of strategy, definitely looks like a professional who knows what they're doing. 1047.08. Oh, another one right here. Another one. So they legged in. They legged in from the morning all the way into the afternoon. This one was 6 hours apart. So obviously somebody is placing some really big bets right now on the March options chain. Mildly bullish. They're betting that this is going to go from 3,500 to 4,500 for their max profit. Max profit happens for them at March on March end of March at 4,500. So that's what is it? That's like almost 3 times higher than where it is right now. That would be max profit. However, though, they did hedge. It's a hedged bet. So even if it goes down and they're completely wrong, they will still collect about $400,000 out of this. What a beautiful trade. I mean, this was a beautiful ratio trade, whoever did this. This is a great trade in my opinion. Great trade. If only Deribit allowed Americans. I know for companies they do, and that's really why I want to open up definitely. That's definitely why I want to start like an LLC, like a side entity for trading, so that I can get into that Deribit so I can, get it. So Deribit can accept. I think they accept American companies, but not American individuals. But that's what I'm seeing right now. The March contract. That's where all the action is right now in ETH. See, block trades are taking over retail. I mean, today it's look at this. When do we ever see this? When do we ever see this, guys? When do we ever see like the pie chart is always the other direction, more blue than red. The institutions are taking over. They're taking over. They're taking over crypto. All right. This. You remember a year ago on crypto Twitter, how people were saying, "Oh, the enemy of DeFi is traditional finance." You remember that? How silly do they look now? All right. I know this is a hindsight, but just anything crypto Twitter says, it's usually it's nonsense. Okay. Exactly. Deribit itself is like, yeah, exactly. It's traditional finance. And so, yeah, look at all the stuff for the past year saying, oh, how, DeFi, was going to replace traditional finance. No, that's not how it's going to work. You need traditional finance. Those, you need that mature money to be a part of this, and it'll just get incorporated into traditional finance, and that's how the world of wealth works. Okay, if something is good, if it's productive, if it adds value, the big money incorporates that into their own. Okay. Yeah, exactly. So Celsius, exactly too. Those kinds of hedge funds, they're all modeled after traditional finance. Exactly. Right, right. So yeah, in the future, of course, that might change. You're absolutely right, MSC. That yeah, we might see more decentralized organizations. Um, but for now, I think. But for now, for sure, what is for sure is that ETH and Bitcoin definitely have that institutional participation. When we talk about macro, when we talk about commodities, equities, currencies, bonds, in that same breath, we have to talk about cryptos. I think it's now a legitimate. It has become legitimized asset class. I'm not saying shitcoins